Hey everyone, welcome back to the channel, your number one source for income-oriented investing. I got a special guest today, Larry Kane from Simplify ETFs, and today we're going to talk about SVOL. So Larry, thanks so much for coming back on the channel. How you've been?
I'm doing great, Adriano. Happy to be here. Thanks for having me again.
I'm happy you're here as well. Great time to talk about SVOL because recently you guys not only passed a billion AUM with SVOL, but you also got a five-star Morningstar review. You have that here, Morningstar rating 5 star. You passed $1 billion. You're almost at 1.1. So just for my audience and myself included, I have no idea what these Morningstar ratings are. You know, sometimes I see a 4 star on similar income oriented funds like QYLD or JEPI, but I've never seen really a 5 star for an income oriented fund. So first of all, what would make SVOL get a 5 star Morningstar review? Maybe we could just start with that.
Sure. I mean, it's basically based on risk-adjusted returns. So in the case of SVOL, it's, since its inception, which is a little bit over 3 years now.
Yeah.
So it's risk-adjusted returns versus peers.
Okay, awesome. Well, congratulations on that. Obviously, a billion. Correct me if I'm wrong. This is Simplify's most AUM or one of the most
Yes,
biggest
it's
ETFs.
our second largest AUM fund after our mortgage-backed securities fund,
After
MTBA.
the okay, perfect. Which is also in SVOL, which is really what I want to focus the conversation today. So SVOL, I've seen it come out and really evolve with time, which for some people it scares them. For me, I like it because it shows that the fund manager it is evolving with the times. So if I'm on your website here, if I just scroll down and I look at the you could see the returns and everything. Very, very nice returns, by the way. Very similar, if not very, very close to the S&P 500. So obviously, very, very nice returns here with high yield. But I've noticed that throughout the 3 years, there's been a little bit of shift with the holdings. Whereas, in the past, if I remember correctly, correct me if I'm wrong here, it was mostly just the VIX short strategy, the point 0.2 to point 0.3 X VIX short, and then mostly all short-term government treasuries, which you still see a lot of government, short-term treasuries here. But you now have about 40%, approximately 10% each in other Simplify ETFs, really focusing on fixed income or the bond market. So you have 10%, a little over 10% in MTBA, which is the Simplify MBS ETF, which I'm assuming is the one that has the highest AUM that you mentioned before. Obviously focusing on mortgages, CDX focusing on high yield corporate bonds. Then you have Buck stable income, which is kind of like a cash alternative, very stable monthly income cash alternative. Then you have AGGH, your aggregate bond. When I see aggregate bond, I see kind of like just give me a little bit of everything in the fixed income world. So my most important question to you is why did you guys decide to start adding these ETFs, which I'm assuming, supplement the income of SVOL?
Sure. Well, we launched SVOL back in May of 2021. So that was before the Federal Reserve began raising interest rates, right?
Yeah.
And then since then, the short-term rates went up, over 5%. But also, it was like the worst 3-year stretch almost in history for the investment grade bond world, correct?
Yeah.
And bond yields went up tremendously. And so, after the incredible rise in yields, our portfolio management team just thought it was a better opportunity to be investing in longer term fixed income securities rather than just staying in treasury bills.
Okay. And how does this, how has this move or this shift affected SVOL in the last 6 to 9 months? I mean, I don't know exactly how long. I know AGGH was there, Buck was there. Then I saw you added CDX, then MTBA. How has this impacted SVOL, would you say?
There hasn't been a great impact so far, although that's beginning to change, right? As the past few days, rates have really started to come down. So, we're anticipating more of a benefit from the longer term fixed income funds than we've had so far.
Right. So when rates actually do start to get cut, which we're all assuming, we're starting, the predictions are going up or the chances are going up, it's going to be in September. This helps long-term bond or fixed income assets, right? So obviously it would help, or it would have a positive impact on these four ETFs, which make up now about a little over 40% of SVOL. Is that correct? Would you say that's accurate?
Correct.
Okay. So
and the other thing to note about
yeah,
longer term fixed income is
yeah.
not only will they get benefit in general with a falling rate environment, but they also serve as kind of a tail hedge as well for the VIX strategy.
Yeah, and maybe we could go into that because Shailesh did mention that last time, where the VIX, if you're shorting the VIX, it's kind of like it and if you look on your website and you have the comparison to the S&P 500, it's SVOL's performance really matches or mimics, I would say, what the S&P 500 does. So Shailesh, I believe, told me, look, we're adding some fixed income, like you said, to kind of give a hedge to the equity market. Can you just explain maybe that in a little bit more detail?
Sure. I mean, well, typically what you see during tail risk events, for example, going back to the global financial, actually even going back earlier, back in the early 2000s to the dot-com stock market crash,
Yeah.
and then to the 2008 global financial crisis, and then again during the COVID decline in March of 2020. Each of the times when there's extreme volatility and extreme pressure on equities,
Yeah.
that's typically when treasuries do well,
Right, because
right?
everyone wants safety. They go into treasuries, I'm assuming.
Exactly. And so they do serve. I mean, it's not a direct hedge against the VIX, but it does certainly help historically during times of tail risk events.
Yeah, some sort of diversification. And this is, the VIX is really, really spiking today as we're filming this. This isn't on August 5th. It's been, I think the highest level since COVID. I mean, if you just look, it's just straight up. So you actually see the impact that it has on SVOL. And of course, SVOL is going to go down when this happens, right? Like today I'm filming this, it's down 3.89%, something like that. But the S&P 500 is down 2.6, 2.7. So it fairly mimics it. I would say that, SVOL is behaving exactly how it should be. Now, you guys you're not shorting the VIX with the entire NAV. You're only doing it with zero point 0.2 to 0.3x, which if we just translate that in easier terms, you're using, correct me if I'm wrong here, Larry, stop me at any time. You're only using between 20 and 30% of the fund's net asset value to do the VIX shorting strategy. You're not using all the
Right.
assets to do that. Is that correct?
Yeah, that's correct. We are shorting the VIX with approximately a quarter of the fund's assets.
Between 2.2 and zero point 0.3, which the middle is 0.20. Yeah, okay, perfect. Makes perfect sense. And are you still hedging it in cases of extreme VIX spikes, kind of like today? I think it reached 30, 35. You're still hedging it. You're still buying VIX call options as a just in case massive black swan event. You could actually see them right here. Looks like you guys are buying the VIX calls at 50.
Yes. So we are still with a small percentage of the
Small
fund's
percent.
assets.
Yeah.
We are buying those VIX call options, which is another part of the tail hedging strategy.
Okay. Perfect. That makes sense for sure. So yeah, it's just like the objectives of the fund. So they still ring true. You're still doing the VIX short strategy with approximately quarter of the fund's net asset value. And then I'm assuming all the rest, that's where you're holding the short-term treasuries. You're holding those four ETFs now, which make up 40%. I also noticed you're doing some other stuff here. I believe these are short-dated put spreads or call spreads. I've seen a few of these. You do this a lot with your other ETFs, right? Things like Buck, like High, other things like that. So is this another component that you added just to increase the income a little bit, to increase the hedge a little bit? Is this a spur of the moment strategy, or you're going to be doing this kind of thing going forward as well? I don't know if you could answer that question, or I'm making
No,
sense.
those S&P 500 puts
Yeah,
or put spreads are designed to add just another type of hedge to the portfolio.
another type of hedge in case the VIX spikes or the market goes down,
Right.
right? Okay, perfect. So, yeah, I mean, that's really the questions I wanted to follow up on. I know you can't talk about other funds, but I have to mention this because I've been getting a lot of comments on this. People are saying, well, hey, ZIVB, there's an ETF called ZIVB, which actually does 1x short. So it's much, much, much more aggressive than SVOL's short. It has a very high yield of about 25%. So people are saying, oh, well, ZIVB is better. Well, in days where the VIX spikes like today, obviously you know what's going to happen. ZIVB is down about 11.53% because it's basically SVOL's strategy maximized without any hedging. So in case any of my audience members know about ZIVB, we're curious. It's basically, SVOL, a lot more VIX shorting, but no hedging. So obviously in days like today, it'll be an absolute disaster. So much, much higher risk, obviously. I don't know if you want to add anything to
Yeah.
that,
No,
but
there are several VIX-based products that are available. As far as I'm aware, all of them take on a much higher exposure, uh,
right.
either long VIX or short VIX. So on the short VIX side, you have products that are, 50% short VIX.
Yeah.
You have other products that are 100% short VIX.
Yeah, like this
Um,
one.
yeah, so those are going to be, extremely volatile. So, approach with caution. I mean, you can make a lot of money in those type of products,
Like you
right?
lose a lot, like today.
Right. Or you can lose a lot. So those are going to be, I mean, the VIX itself is, 5, 6 times more volatile than the S&P 500, right?
Incredible. Yeah.
So,
You really see that
yeah.
the results today, right? So and that this is where you could see the hedging, right? Obviously, the SVOL is going to go down, but definitely not as much as a more aggressive VIX strategy. There's hedging. There's a lot of hedging involved. So so congrats on the success. This is a very successful ETF. I own it myself. A lot of members in my community own it. I really considered kind of like an alternative income, stable income source where you get, 15, 16% yield. So my final question, and I kind of talked about it with Shailesh last time, I just want to confirm this is true. What would you say in a few sentences is the objective of SVOL? Is it just to deliver an approximate 15% yield in the most stable way possible and to keep that distribution, which has been very, very stable at 30 cents a month for the longest time? What would you say in short is SVOL's main objective for investors?
All right. Um, I would say that the primary objective is total return, right?
Okay.
But we're doing it in a way that it's also distributing, a generous amount of income. But aside from returns,
Mm-hmm.
the other use case for SVOL is since it's based on the VIX, which of course is a volatility index based on the S&P 500, right?
Yeah.
So SVOL, will have positive correlation to the S&P 500, but the return drivers are different,
Right.
right? So with stocks, the return drivers are mostly what is earnings, and number two, what is the multiple that the market's going to place on those earnings, right? With SVOL, the two return drivers are, that steepness of that VIX futures curve, right? And also the level of the curve. Is the VIX going up or down,
Mm-hmm.
right? And so even though there's positive correlation, it's a different set of return drivers.
Yeah.
And so therefore, it adds to the portfolio diversification.
It
Just like
adds.
you don't want to have all your stocks in large cap growth or small cap value or, Japan or wherever, you don't want to have all of your equities just based on the multiple that the market places on those earnings, right?
So this
So
is
it's a
kind of
way to diversify your
a
equity.
diversifier correlated towards the equity market,
Correct.
the stock market. And another question, now that the VIX is spiking, would you say that those premiums that you guys are getting are a lot richer than in the last 6 to 12 months where volatility has been pretty much non-existent? Is it easier to support a monthly distribution? Because my community is all about income. They are very, very reliant on that consistent income. So in a scenario like right now, which is the scenario or the tough scenario for SVOL or anyone doing this VIX short strategy, is it can investors expect these consistent distributions?
Yep.
Is it
Sure.
easier or is it harder? What would you say to investors who are really reliant on that income and are relying on SVOL
Right.
to deliver that?
Well, couple things to note here. Um, if you recall March of 2020,
Yeah.
when the pandemic first broke out and there was a ton of uncertainty and volatility, and stocks went down 33% in 3 weeks, right?
Yeah, right here.
Um, the VIX, spiked up to, over 80, right? And today the VIX actually spiked to 65. Now, the last time the VIX was at 65 was at the end of March of 2020, right? So it was a very unusual period to have the
Yeah.
VIX spike up so much. So I've spoken with quite a few clients that are actually excited to get into SVOL now because when the VIX was very low, it was 12 or 13 for the longest time, right?
Yes.
For most of this year. Um, the higher the VIX is, actually, the more of a tailwind it is for SVOL because
The
VIX is
better it is, you mean?
exactly because the
The-
VIX is a mean reverting index, right? Long-term average VIX is somewhere between, say, 15 and 20. So when the VIX is above that, that's generally a good time to be owning a product like SVOL.
Yeah. Yeah, and it kind of, it reminds me of, it's kind of a good time to get into equities or at the S&P 500. That it's so correlated to equities. I mean, this is the time where it's good to buy more. So personally, I have SVOL on drip in my retirement account, so I'm just dripping away, reinvesting away. Obviously, I like dripping at lower prices than higher prices. Um, do you see yourselves keeping let's say you're getting a spike in premiums? Do you think you guys will probably leave it at 30 cents? I know you can't answer really that question about what the future distributions are going to be, but is your intention really to maintain these stable distributions? Do you see any reason why you would raise or reduce SVOL's
Yes.
distribution?
So SVOL's distributions are managed, and we generally set it at an estimate
Mm-hmm.
of the fund's expected long-term carry. So
Yes.
carry has two components. That is the expected return from rolling the VIX futures, plus any income we earn from the fixed income side of the portfolio.
Okay.
So generally speaking, that's the way we kind of set that long-term distribution. So we're not going to make many changes too frequently.
Okay.
So, you asked what would it take for the distributions to come down? That would probably be a long-term scenario, where that VIX futures curve was pretty flat and there was not as much roll yield to be earned, right?
Yeah.
Perhaps combined in an environment where interest rates are very low, so there's not much yield coming from the fixed income part of the portfolio.
Yeah.
That would probably be a scenario where we might have to look at the distribution. But for now, the goal is to keep it relatively predictable.
Okay, fair. And I'm assuming adding those four ETFs really helps a lot because, correct me if I'm wrong here, but a lot of these are between 7 and 8 and even 10, 11% yield themselves. So I'm assuming that kind of really, really helps. This is not just the VIX short strategy. Now there's other stuff in here that it's actually income generating plus those short-term treasuries. I'm assuming that
That's
that
correct.
helps you manage the distribution as well.
That
So,
helps as well. Exactly.
okay. Okay. Well, Larry, you've been great. I really appreciate you having on. I know Shailesh was supposed to make it, but he got tied up with something, but we'll have him on next time for sure. But I appreciate you taking the time to discuss SVOL. It's one of my personal favorites. I'm always probably going to hold it long term. It's even on my father's retirement account, and it's just a super stable fund where you get that 15% yield, something like that, consistently. So congrats on the success, and hopefully we'll have you back as well.
Thanks a lot, Adriano. My
All
pleasure.
right, take care.
All right. Bye.